Last week, Minister of Finance and Coordinating Minister for the Economy, Mr. Wale Edun, announced government's decision to go into the debt market with an initial $500 million offer. But this time around, it is targeted at Nigeria and Nigerian funds out there. The foreign exchange concerns is one of the reasons behind this decision. And the Diaspora bond has actually been muted before now. It was first disclosed after the spring meetings 2024 in Washington, D.C. by the minister as one of government's strategy to stabilize and grow the economy. Today we have eyes on this security issuance in the wake of ongoing refunds and the race to close the financing gap, as well as rising tensions and concerns across the country. My name is Leah Katung-Babatunde, and as always, it's nice to have you join me on The Policy with Leah. Let's get this started from the trends table.
The Federal Executive Council, in a meeting presided over by President Bola Ahmed Tinubu on Monday, approved the sale of crude oil to Dangote Refinery and other local refineries using the country's currency, naira, instead of dollars. Chairman of the Federal Inland Revenue Service, FIRS, Zaka Didiji, who disclosed this after the meeting, said it was in national interest. The 650,000 per barrel Dangote refinery had engaged in a media war with the regulators of the oil and gas industry until this intervention. Chairperson of FGN Holdings, Femi Otedola, has shown in support for the federal government's new policy to impose windfall tax on Nigerian banks, accusing bank executives of profligacy and extravagant spending, including the purchase and maintenance of private jets. President Bola Tinubu had on July 17th asked the National Assembly to amend the 2023 Finance Act to impose a one-time windfall tax on banks' foreign exchange gains. The National Assembly increased it to 70% from the proposed 50% in the amended Finance Act of 2024. The government described it as unearned income that deserves to be redistributed. The coordinated online campaigns for protests against hunger and bad governance culminated in Nigerians across the country, coming out this week to protest with another set engaged in counter-protest. The protest went violent in some instances, with authorities dousing tensions and announcing measures to mitigate the effects of harsh conditions. Federal government has sent trucks of food to the 36 states and the FCT and temporarily halted import duties on food to crash prices. More than 100 countries, including China, India, Brazil, and South Africa, face serious obstacles that could hinder their efforts to become high-income countries in the next few decades. This is according to a new World Bank study that provides the first comprehensive roadmap to enable developing countries to escape the middle-income trap. Drawing on lessons of the past 50 years, the World Development Report 2024, the middle-income trap finds that as countries grow wealthier, they usually hit a trap at about 10% of annual US GDP per person. At the end of 2023, 108 countries were classified as middle income. The report finds that they face far bigger challenges than their predecessors in escaping the middle income trap, namely rapidly aging populations, rising protectionism in advanced economies, and the need to speed up the energy transition. The Minister of Aviation and Aerospace Development, Festus Keyamo, has ordered the grounding of Arik Airlines operations after an Abuja court ordered the sale of the airline's aircraft to offset debts. Nigerian Airspace Management Agency, NAMA, said the grounding of the airline service was in response to a court judgment, saying in order not to allow the aircraft to be taken out of the country, the airline had to be grounded, thereby justifying the minister's directive. On July 19, 2024, the Enforcement Department of the FCT High Court enforced an order made by the court regarding a debt of $2.5 million owned by Arik Airline to one Atlas Petroleum International Limited by attaching their aircraft.
Remittances is one of the ways Nigeria gets to boost her foreign exchange supply and, of course, boost government's investments. The federal government says in a matter of weeks, Diaspora securities of $500 million will be offered. And so our policy conversation for this week is actually on that offer. We need to attract those savings. And indeed, we need to attract the savings of Nigerians that keep their money abroad. We have an open exchange rate system. It is not illegal. Now, those were the words of Mr. Wale Edun, the Minister of Finance and Coordinating Minister for the Economy, recently at a briefing in Abuja. He was speaking about the recent policy actions being taken by government to address mounting concerns about the health of the economy, part of which is the issuance of a $500 million denominated security using the Nigerian financial system, the Securities and Exchange Commission, the banking system, and of course, investment bankers in the country. For context, Nigeria's budget deficit is around 10 trillion naira. And of course, it is about to widen considering the supplementary budget and the changing dynamics. So what is the workability of this policy decision? I have joining me Mr. Sterling Ellis. He is the CEO of Sterling Ellis and Co. Limited. And together we shall be looking at the accelerated stabilization and advancement plan, particularly with regards to the bond issuance. It's nice to have you, Mr. Ellis, on the program.
Thank you very much, Leah.
So in the first instance, we're issuing a $500 million denominated securities, and it is targeted primarily at Nigerians and not the foreign markets as usual. So give us a contextual view. How timely is this?
I wasn't quite surprised that we're trying to do the impossible in Nigeria. Suffice to say that it takes qualified professionals to practice in jurisdictions around the world. The Federal Republic of Nigeria doesn't have the capacity to establish capital markets offices in money centers of the world. So their access to the markets is highly limited, if not impossible. So the best option for the Federal Republic of Nigeria is to identify a duly qualified local content brand that's qualified to practice in Nigeria, essentially in the United Kingdom and in the United States of America, so that we'll be able to access all the financial markets of the world. The Securities and Exchange Commission, the Chartered Institute of Stockbrokers, the Debt Management Office, the CBN, none of these institutions have any role to play beyond the shores of Nigeria. They can issue Nigerian securities, they can issue whatever currency securities they want to, but there are loads of disadvantages. It would result in exchange rate risks because the fluctuation of the dollar would impact negatively on the naira whenever the naira depreciates.
Can I just interrupt you a bit to have you walk us through, basically, so that we'll get a hang of this conversation? How were they doing it before now? What were the processes? And what is the process Nigeria has been doing that is costing Nigeria?
Well, Nigeria has actually had corresponding relationships with financial institutions maybe around the world. I'm talking about the financial institutions in Nigeria. And those relationships are quite loose. They're not formal. And there is no patriotic zeal emanating from those abroad and from those who are having relationships with financial institutions abroad. if the interest rate to generate $1 worth of loan is 30%, and a local content brand can get it for 5% because of the transcontinental reach and the professional qualification to have access to the lowest interest rates anywhere in the world because of the qualification to do so. The disparity between 30% and 5% is huge. So that is one way that has been weighing down on the Nigerian economy, exacerbating, if you will, the debt burden. And so the other best option, in my opinion, and that is of international best practice, that is practiced everywhere in the world. The Chinese do it, the Indonesians do it, the Singaporeans do it, is to have a local content brand that is duly qualified to scour the world and identify opportunities in any currency, formally, in a lawful manner, because that's the only way that the markets will open up. Currently, what we've been doing doesn't open up the possibility of having access to investment flows into Nigeria, because the disadvantages of issuing foreign currency denominated domestic bonds are just too many, and they would disparately affect the exchange rate eventually, because we don't have the capacity to control how our currency depreciates. Sometimes we are forced to devalue it because we are not really organized, and we have not put our house in order. So there are international mechanisms through economic strategies that other countries utilize to create imbalance in other economies, and Nigeria is one of them. If you issue $500 million worth of domestic bonds, how would you source dollars when the exchange rate depreciates? How would you source money in dollars to pay the principal and the interest? Mm-hmm. You are also ceding your capacity as a sovereign state to manage the monetary policy that is quintessentially yours. You're ceding it to the country whose currency you're trying to issue securities in. And then there's also the possibility that the sovereign risk will increase because if you're not able to service your debt, the news will be disseminated across the entire world. And as a result of that, nobody will want to come to Nigeria to invest. So I believe strongly that we shouldn't try to create situations that we really cannot manage. Right now, the exchange rate is at $1 to 1,600, I believe. With all these policies, eventually, it would weigh down on the Nigerian naira. I won't be surprised to see that sooner or later, it would go to 5,000, 10,000, 15,000, 20,000 per dollar. And it's not impossible.
May we not get there?
And we may not get there, but it is hinged upon our capacity to be disciplined enough to do the right thing. You can't eat your cake and still have it. It is wrong to issue dollar-denominated domestic bonds. Whoever is advising the Federal Republic of Nigeria is adequately erring and misdirecting the country. As a duly qualified capital markets professional within the United Kingdom, the United States of America, and in Nigeria, I think I'm well suited and most qualified to speak on this subject matter. There's absolutely no justification for the Debt Management Office, the Securities and Exchange Commission, the Central Bank of Nigeria, and the Chartered Institute of Stockbrokers not to, coalesce and converge on determining finally upon the use of a local content brand that can actually efficiently and effectively execute on the Nigerian economic project. If we're talking about a trillion-dollar economy, you can't create a trillion-dollar economy without having access to investment flows from abroad. And you cannot get those flows formally, legally, at manageable cost of capital and minimal cost of capital if you don't have a professional who has not only the patriotic zeal, but the capacity to be directly involved in all the financial markets of the world, not only dollar-denominated spaces.
If we're having a deficit looking us in the face, aside borrowing, is there any other way out?
We don't necessarily need to borrow because the world is actually changing drastically. There is access to monies in, for example, the climate fund. Climate finance is an area that has pretty much funds to enable various geographical spaces, especially like Nigeria, that has a lot of pollution emanating from generator fumes, from truck fumes, car fumes, dust, and all that, to mitigate the damage to the ozone layer, and also to depress, if you will, the carbon footprint around the entire world. There are funds that are being kept for countries like Nigeria to have access to, not just Nigeria, but wherever they identify that they can trade off, mass transit, to all these fossil fuel-powered cars and machines and the like. So there is money in that area that can be accessed to have mass transit.
So maybe we're getting there with the CNG buses.
Exactly, that's one way.
Sorry, let me just also come in there. In the light of that as well, we have not really shown a commitment, for instance, to end gas flaring, just one item out of those very critical ones. Will this not blow our chances?
Well, of course, whatever mitigating efforts the entire world is engaged in has to be corroborated by not only the federal government, but by the attitude of everybody in Nigeria. In terms of sanitizing the space, we have to be committed and be involved at a global best practice level. I'm not sure we are there yet, but we seemingly are starting to wake up a bit because all of these economic stresses as a result of our inability to put our house in order. I believe that moving forward, we have the opportunity to have access to global funding, for whatever it is we want to do in Nigeria. Because it's not a question of having access to loans. You don't necessarily have to use loans. You have sustainability financing. If you are engaged in a project that proves sustainability in value, there are funds that you can access at very low interest rates or cost of capital. Let's not call it interest rates, because we can call it cost of capital, because interest rates may be associated with bonds and loans, but cost of capital includes, the capital markets and the like. So if the Federal Republic of Nigeria gets into a joint venture partnership, we'll be able to look for funding for various entrepreneurs who are well served and capable to execute requisite function in the various sectors of the economy in order to be able to have access to the entire world, to make sure that if the funding comes from Japan, it's lawfully done. And the requisite reporting in terms of focus reports are done timely, and you satisfy the regulatory framework of the various geographical locations where these capital markets, entities will be located at. So it's quite easy to do. The most difficult part is to get the qualification. And unfortunately for us, the global system does not allow Nigeria to go to Tokyo, Japan, and practice capital markets activity.
Oh, really?
It doesn't. The SEC, Securities and Exchange Commission's purview, rests only in the Federal Republic of Nigeria. The Debt Management Office can issue Eurobonds and all of that. But if we have duly qualified brands scattered in money centers of the world, we don't have to be looking for only Eurobonds, or be struggling to issue dollar-denominated domestic bonds, because there are other financing sources that we can easily have access to.
So do you see Nigerians with funds out there willing to buy into this?
Well, the only way Nigerians abroad in the diaspora, not just in the US or in Europe, around the entire world, would have trust and faith in the Federal Republic of Nigeria to raise dollar-denominated, issuing of securities, is if there is a physical office located in strategic points that satisfies the regulatory frameworks of those countries where the Nigerians are located or domiciled in. Because they can see this particular physical office and say, we have confidence that this issue of securities is being done according to the regulatory requirements of these jurisdictions where they are domiciled.
So in essence, you're saying let Nigeria patronize Nigeria.
Exactly. If you don't patronize Nigerians, then you lose the sovereignty of the name Nigeria. Because if a Nigerian, according to the Executive Order 3, which President Muhammadu Buhari passed into law while he was president, allows a local content brand to take precedence over any other professional who is coming into the Nigerian space in any sector of the economy. So with that, the Nigerian would exercise his sovereign rights, not because he's a Nigerian, but he's duly qualified and a professional in that space. So if you're not using a Nigerian, what's the essence of being a Nigerian? What's the value there? You don't disregard Nigerians because you think you can cut a deal with a foreign platform that subjugates the entire Nigerian economy to mediocrity. It's unacceptable. So President Muhammadu Buhari, in his good manner, passed the Executive Order 3 that empowers Nigerian professionals to take precedence over anybody in any sector of the economy. And I think that's a very powerful sovereign-related right that Nigerians can exercise in any sphere of the economy.
Most sincerely, thank you, Mr. Sterling, for making our time for this conversation.
Thank you very much, Leah. Appreciate it.
My name is Aldo Mekori.
Keep watching The Policy with Leah.
It aims to provide policymakers an opportunity to explain their policies in a way that members of the public affected by those policies can understand and engage with those policies.
Keep watching The Policy with Leah.
We move on to our education segment, Simplify These, and from there we head to the markets. The most we can take on this edition, do well to log on to our sister website. It is www.marketnigeriatv.com. We have all the market details available there for you. Also, remember to go to our YouTube channel, follow, subscribe, and like our page. And of course, we have these and more available for you. Communicate with us. We value your feedback, so keep your comments, questions, and suggestions coming in. On this program, it is always about Nigeria and Nigerians, how to get to serve Nigeria, our beloved country, better. And until I come your way again next week, I remain Leah Katung-Babatunde saying, have a beautiful weekend, be safe out there, and God bless Nigeria.